Traders, welcome, all of you. This is chapter 4. The subject is going to be support, resistance, reversal signals. We're going to use them as reversals. I also would like to add a few things and cover a few things before I begin. In lesson 3, we were covering a lot about indicators. We talked a lot about moving averages. We covered actually a lot of things, but I may have forgot to add an additional moving average. I believe if we look at the ones we have, it shows that we have what is called the, well actually we had the 10, the 50, the 65, and the 200. I don't think I told you to add the 20-day one. So if I did, and if I don't remember if I did, add it, right? And we remember in the lessons, go back to last chapter 3, and then we'll tell you exactly how to add another indicator if you're just beginning in this course. Of course, if you're taking this course online, you can't go from one lesson without studying the first one. So if you it won't even allow you to come to this lesson, so you can always go back and rewatch the videos regarding this lesson. Also, I want to make sure that everyone knows that I am no way in form or fashion giving out financial advice. If you feel like you need a financial advisor, I would suggest that you seek out a professional financial advisor. This is just merely my opinion, my analogy of dealing with chart analogy, studying patterns within the market. Um, Also, I want you to remember to go and apply for the free trial, which allows you to get more indicators. Right now, we're dealing with, may have covered over 9 indicators, maybe 10, and we're about to cover 3 more indicators. We're clearly becoming on professional levels when it comes to being able to use these indicators in terms of reversal signals, in terms of trying to make better judgments in our understanding the market. Um, I can never also stress enough for you guys to go and please enroll if you're just now um, tuning into our class. It's a very wonderful class. Chapter 1 is given away completely free. It covers the subject of candles, and it's a very nice subject that I think everyone will enjoy. And you can't move forward without understanding candles. This is what we're going to always be working with. This is what you're going to be looking at every day as a professional trader. You can go on proreadiness.com. You can go on proreadiness with an S.com, and I will link you to the online course that you need to be able to enroll. Also, you can find any information on Facebook. If you have any questions, if you want to contact me or send me a message, you can get all that information off of the website, the online course, as well as Facebook at Pro Readiness Traders. Um, you want to sign up as well for membership. This is just a basic class right now what we're speaking about. It's $100 a month, $99 rather. Um, it also has an advanced class that's going to also be talking about more strategies. And more strategies is good to have as well, especially when you're trying to find better positions in the market. Um, that way you can find more positions, more order entries. Um, that class is also $100. It also offers live trading, meaning that every day, if you're signed up as a membership on Advance, you get to, you know, discuss trades, order entries, keep track along with me on what decisions that you see that I make in my opinion on the adjustments that's going to be made throughout the week. Of course, on Facebook every week, every Monday, I'm going to put out, what I feel like, is a good trade for me in terms of what the market is doing in the direction. So you'll be able to get that online in the basic course. But however, there may be other positions coming out during the week. More positions, more market, more liquidity, more. We talked about that earlier. The ability to get your money in and out of the market in different positions. When one is not going well, you want to know that there's something else available, and you won't be able to take advantage of that unless you're in advance, as well as learning how to be able to, advance to that level. Okay, so what we're going to be talking about today is support and resistance. Okay, I'm going to open this screen up, and as you can see also, let me go back right quick. We can see here we have what is called two markets open right now, two windows rather. Of course, if you was to go on the templates, you could easily have put this together in a four or eight. That's one of the reasons why if you pay 29, you get four markets, and that would be tracking two markets at one time. Because right now I got two windows open, and I'm doing two different amount of works in two different windows. If you look over here and notice this one in particular, you see how well things are harmonizing in terms of our indicators. We have three, which is the stochastic, the MACD, and the RSI, right? And we also have the volume right here. We have six moving averages. So that's a total of 10. And then we have the trend lines we talked about. That's a total of 11. And this is what you would need basically on one side of the market, one window, right? And we're going to uniform it with this one. This is the area where we're working on today. And the subject we're going to be covering is support and resistance. And support we talked about is basically the floor. If it helps you floor and ceiling, I use that terminology a lot. But support and resistance is basically what it is. I am putting these on here so I can show you examples of support and resistance. And I want to also show you how support and resistance also can change. When one moment you have something what is called a possible support and resistance, and then the next moment we have what is called the support becoming the resistance, and the resistance becoming the support. Okay, so when this market came up to this particular line and it stayed on this line, as you can see, this became the floor, the support. And because the market kept, this was signs of reversals. So if you were over here, you would have probably got in here and reversed it. Now here is the ceiling. This is the highest. Now I went in this direction, which I should have went here a little bit down, since this is the first time where you see it bouncing off of the top part and toggling in between this area. So as this market was coming up here, you could have gotten out and said, you know what, I'm going to reverse at this point in your order entries, and got it right here and said, if it comes right here, past here, I want to get out of there. And here you see it went back up. Finally, it broke it over here, right? And now at that point, this became the floor, and you can see where it stayed on the floor. This became the support, and the new resistance, the ceiling, is right here. And you can see right here where it pretty much stayed on that particular ceiling, right? And you can also see above here where it broke it, came back down, and still stayed with it. Here you can see it finally came above and went a little bit higher. And of course, we would have to do some more of our indicators and analogy to be able to determine where would that next resistance level be. But we see now here the resistance that was here became now the support, the ceiling. So that's basically what support and resistance mean. And you're going to hear that word a lot in the trading world, support and resistance. It's just the highest of the high and the lowest of the low. Okay? And that's extremely important to know, because our indicators that we're going to be using today and learning about is actually going to show us how to come up with how do we come up with these support and resistance? What determines the high and what determines the low? I mean, I'm new to this. I don't know anything about trading. Yeah, you showed me about some indicators, but what is this, what you're showing me now? This is what I'm thinking in the minds of you guys are saying now. And I'm just, imagining myself as a beginner and how I interpret things. Okay? Now, we know our stochastics, we know the 80%, we know the 20%, we know right here the RSS has that similar rules as well. We know that there's moving averages, and we talked about trend lines, and moving averages at times can work as a support when the particular candle doesn't, like as we can see right here, the candle, sometimes it trends the moving average. See that? This particular one, which is the 10-day moving average. See when you tap on it, how it highlighted? That's a good way to be able to see which one is which. Um, you know, so these are good signs that the market is going to stay up and it's following that 10-day. But these are what we're using these moving averages for, something else. We're not. I don't really rely on these moving averages when I do trend lines and I see that they do not go below the some of these moving averages. And I know they're following, and my trend is doing the same thing. There is confirmation for your trend lines as well. There you go. So that's good to know. Okay, so we're going to come back over here because we're on this chart right here and we're talking about support and resistance, right? Um, and I'm going to get rid of these real quick and go to coming up and talking about, you know, what we want to do to find our support and resistance. Okay, so what the beginning of what we do to start in this chart to be able to find our support and resistance, I want you to remember three words: swing, retrace, retest. Come on, let's say it with us. Let's make it a song. Swing, retest, retrace. Now, what am I saying here, right? Okay, so what we're going to do is we're going to just shrink this a little bit. We're going to just kind of bring this. I usually go back about, I want to say about 2 years. I go back about 2 years on my analogy. We get rid of this as well. Remove these. Yeah, I go back about almost 2 years on my charts, right? So this is December 2020. It's getting ready to be 22, so it's fair to say we could start right here. And this appears to be a low, so we can see right here. Now, in this arrow right here, at this point, I usually switch over. Now, we were using this indicate, this arrow uh, scroll cursor a lot in our other window over here, right? Now, we're going to jump over, and unfortunately, this keeps um, popping back out. I have to do this. A lot of you guys may know how to make that stick, as well as if I would have stayed in two templates, this wouldn't be happening. What I mean by templates, we talked about this area right here, you know, just putting it in two. Now it stays the same. So, but this is sync, and right now I don't know how to take it off sync. So that's why I kind of kept it in this one window. Okay? Now, what I mean by swing is I'm going to go and grab what is called the cross, because we're going to be using, it's more precise in our measurements when we start dealing with creating potential support and resistance levels, right? So we have a bottom right here, right? And since we're going back 2 years, let's go about right here, right? So in order for a market to have what is called a trend, this is considered a trend all the way up. However, in this same situation, we could do a swing. We usually want to go from the highest of the highest, but the thing is if it doesn't retrace above the swing, it is not considered a complete. It's considered a complete swing. If it does go above this, the retrace, the retest. If the retest goes above the swing, then it is a continuation of a swing, like what you see right here, right? We see the market swing up here. It retests, and its retrace, it continued. See that? And then it retrace, and its retest, it continued. And its retrace, right? And its retest, it continued. Now, you see this technically really didn't. You see that right there? Because it didn't actually go above this. And I can sort of like blow this up a little bit more so we can get a better view of this. It's very important that we see right here is what I was speaking about. So technically, this swing could have stopped right here, right? From here to here, right? Then we see it swing again here, retrace, but when on its retest it continued, right? So that's creating another high as well. So even though we can go right here and consider that a high, right? We can also continue this by going from this level to this level, right? Because the swing, retrace, retest, continue. Swing down, retrace down, and it's retest. It didn't go above, right? Here. So this could be considered a swing as well, right? But there's swings within swings as well. So I'm just showing you that we're eventually going to learn how to, in the advanced stage, create support and resistance within each one of these swings. But for right now, we're just going to go from the highest to the lowest. So that's what we're going to start looking for, right? The highest to the low. We're going to just take a window like this. And so right now we see the highest to the lowest is right here, right? Highest to the lowest, right? So let's come over here. Market continues to go up. It swing down here, retrace, but it didn't. It swing and retraced, but the retest, it didn't go above. So it would be fair to say the swing starts right here. Swing, retraced, and the retest continue to go. So from here to here is another swing. See that? Well, no, because it can go from here to here, right? Because everywhere you see it's retesting. You know, as a matter of fact, it probably can go further than that. So the swings, what I'm trying to get you to show you is that because we're going out 2 years, we have little swings and big swings. So let's begin to do our swings, retrace, and retest.